Welcome back, folks. Greg Silverman here, Chief Investment Officer. Another session of Come Learn With Me. This is an interesting article that percolated up over the last few weeks, and one we thought we'd read together with you and get a learning about it and see if we can't get some investment insight. And if you hang around to the end of the video, then you will learn a little bit more about our investing programs. And if you like our Come Learn With Me sessions, please subscribe and like to our channel. All right, let's go. Further gamification or back to fundamental investing. This is by Robeco. Robeco is a large asset management company. Arno van Ryan. First Futu, then Webull, and now Longridge. Taking the subway home in the evening, I've been amazed by the loud and aggressive campaigns for online brokers in Hong Kong Central Station. This in a year where the local Hang Seng index was actually one of the worst performing markets in the world, down 12%. Speed read. Thoughtful long-term equity investors have been joined by inexperienced traders. In tighter monetary context, fundamental analysis should outlast gamified meme stocks. Buy what you know, healthy companies at attractive valuations. Okay, that's it, folks. Thanks for joining me. That's all you need to know about the article. I do like this publication, Harvest. They really do, really condense it down. Let's read on. These brokers also offer their services in the US market, though, and on Wall Street, it was quite smooth sailing in 2021. Stocks closed almost 30% higher after more than 20% return in 2020. The social element, chat with your investor friends, plays an important role in the campaigns. Investing is fun, lucrative, and so easy. I can highlight that. It's just such a good cliche. It's great to see so many new players with the newfound love for our favorite asset class, equity. Robinhood encouraged a new group of equity investors when commissions were cut to zero. The patient and thoughtful long-term equity investors that trade infrequently have been joined by inexperienced traders looking for instant gratification. On your phone, it has become so simple to buy stock through the push of a button. For many, a stock is not more than a chart that is mostly going up, recommended by an influencer. If it disappoints, you can always get out the next day at zero cost. New traders have money and good ideas, but are also likely to have weak hands when the going gets tough. The equity game has also become a winner-takes-all game, with the US and ETFs on the winning side. Out of the nearly $1 trillion that was put to work in equity funds in 2021, more than 70% went into US equity. And indeed, US companies do their best job in managing their shareholder equity, while in most other countries, other stakeholders need to be managed too. America's confidence in equity for the long run is as high as its Chinese trust in buying property. Yeah, and that's saying a lot. American confidence in equity is for the long run is as high as its Chinese trust in buying property. And even they may join the equity game after Evergrande has put an end to home price increases in China. Asian investors also want to put their money into the US winners that now go under the acronym well known to aging fans of The Muppet Show, Mana. Microsoft, Apple, Nvidia, Alphabet, Meta, Amazon, Netflix, and Adobe. Mana from heaven, with a touch of Tesla to top it all. ETFs have been mocked. I love acronyms. When something gets coined as an acronym, it's the beginning of the end. ETFs have mocked up an amazing 93% of global equity fund flows in 2021. Wow, you buy an ETF as a basket of stocks with a common driver that sounds appealing, but you don't know exactly what you're buying, nor at what multiple. Let us make the self-serving case here for actively managed funds, where Robeco portfolio managers will continue to do the fundamental legwork and make sure that the stocks in our baskets are still attractively valued. Plentiful money supply. Many investors play the market today with money being plentiful. This money has been provided by the printing presses of the world's major central banks. At the time, governments no longer seem to be bound by fiscal deficits as they have spent lavishly during the COVID-19 pandemic. Without any punishment from the bond vigilantes, most likely a chunk of that emergency support landed in the equity markets. The table below illustrates how much the global money supply has grown since the end of 2019. Look at the US. Money supply has grown 40%, 102% GDP. Look at China, highly leveraged, as is Japan. No wonder that some folks now consider the world's main currency to be monopoly or Mickey Mouse money. There's so much of it. Quite anyone say the word inflation, quite a few of these skeptics have looked into crypto markets to find protection. Supply here is capped by design for each currency, but there's no limit to the number of cryptocurrencies that could eventually be created. Thank you. I've never actually read that. It's always something I've had in mind, but I've never read it. Interesting. Crypto clearly went mainstream in 2021. As I watch sports events such as European soccer or Formula One racing, the crypto exchange advertisement cannot be overlooked. The overall market of the currencies is no longer insignificant, close to 2.3 trillion, but still less than the market cap of Apple, the world's biggest stock, at 2.9 trillion. More gamification can be found in the relatively young market for special purpose acquisition companies or SPACs, as many of these equity deals are now done through celebrity endorsement. Buy a SPAC from your favorite sports star, music idol, or from real estate tycoon Donald Trump. Not only real estate icon, ex-president. This way the rich and famous can literally monetize their fan clubs. And on top of that, we now have larger-than-life metaverse. Is it a game? Is it for real? Investors are wrestling with the implications and the potential winners of this trend. It must be important since Facebook even changed its name to Meta. It's hard to envisage a future where we all have a second life in a parallel online economy. Heaven help us. But is it worth to revisit Spielberg's 2018 movie, Ready Player One, or to simply speak to teenagers? More games, that's for sure. How are we doing on this? Okay, not long to go, guys. Stick with us. Okay. Central banks are aware they may have overdone their stimulus with inflation popping up in many areas. I thought they said inflation was temporary. Doesn't look like that to me. In the real economy, central banks are aware they may have overdone their stimulus with inflation popping up in many areas. We will thus see more tightening announcements in the first quarter as they try to normalize policies. By the way, inflation is as high as it's ever been in the last 40 years, just FYI. The US Federal Reserve is now expected to make its first hike in March 2022, with a few more planned for later in the year. This has historically been a more difficult environment for emerging equity markets to perform. Recent US dollar strength contributes to the outlook being more muted here. For developed markets, our outlook remains bright. As the strong keep getting stronger, earnings expectations are still likely to be outgunned. Supportive outlook in corporate earnings. In both developed and emerging markets, the outlook for corporate earnings remains supported. 2021 was a bumper year, but we expect decent growth for 2022 as well. Here's another winner-takes-all element, as the large listed companies are generally much less affected by the pandemic than the smaller companies, and particularly by those in the service sector. What will 2022 look like? More fun and games for those in the market, or return to old-fashioned investing? Well, we will definitely start with more games, as the 24th Winter Olympics will be held in Beijing in February. Investors wonder whether Chinese stocks can come back after offshore listings were hard hit by regulation and the burgeoning property sector was heavily curtailed in 2021. A remarkable 50 billion of money has continued to flow into this underperforming market, which is a rare sight in momentum-driven markets. It is, wow, that's remarkable. 50 billion of money has continued to flow into the underperforming. We remain fairly cautious for now, but the one country with decent real rates at least has room to support the economy via rate cuts. In the end, it's likely that under a tightening monetary environment, fundamental analysis will outlast gamified meme stocks. The first quarter may still see the tail end of the rally of everything, but I don't think not. But the likelihood of a more discerning market environment is increasing in 2022. That's a great article. Thank you very much to all of you who voted it up and shared it and made it rise to our knowledge, or for us to go through. Come learn with me. Check out some of the links below. You'll see our investment program there. You'll see some programs to access our network for the accredited investors, and you'll see some of the niche investment groups that we partake in. This is Greg Silverman, out for now.